it covers so many things. It covers life insurance. There's also benefits that you can use within your IUL while you're alive. So say if something happens and you can't work, you can actually tap into that cash value to where you can support yourself while you're alive. You know, there's also things where a lot of people don't know. IULs, you can get loans. So IULs is kind of like you're becoming your own bank. So now that I have my kids and my grandkids set up on IULs, once they get to a certain point in life, they may have $150,000 in cash value. Well, what if one of my grandkids is like, well, I want to go to college and I don't want to, I don't want to get any student loans or anything like that. They can go into their IUL and take money out to pay for college, to buy a car, because they're their own bank. They don't have to go to a bank and get a high interest rate loan. They can borrow from themselves at 2%, and then you're paying back yourself 2%. So that's why I like IULs, ways that you can use it. Now, granted, term is cheaper. And the IUL, that's why I gave y'all the assessment, because the IUL is not for everybody. If you don't have consistent income, or if you're not that person that can say, okay, I can commit to pay this every month, or do the whole year option. Hey, I know I get a tax return. I know my premiums are $6,000 in a year. I'm just giving y'all examples. I'm throwing numbers in. So you get a tax return of $8,000. You say, you know what? I'm paying my premiums up for the year. You have to be consistent. You have to know that this is not something that you want to be paying for and then it lapses. So you want to make sure that you get a policy that you can afford and that you can continue to pay. So it's really good at building generational wealth. That's why I said I set my kids and my grandkids up with it, because it provides a direct transfer of wealth and they don't have to pay any taxes on it. So it can be an educational fund. Like I said, forget all these student loans and things like that. Even though, your kids can go for scholarships like Kay's kids, full scholarships. That's what But it can be, they may need something when they're in college, or maybe one of the cars will break down or something. Wouldn't it be nice to say, I borrow for myself, instead of going to a bank to get a loan? I borrow for myself. I wanted a $20,000 car, so I pull that money out for myself. That's what I want my grandkids to have, and so that's what I want for you guys. And so cash value from IULs can be leveraged during your lifetime for emergencies or opportunities. You can pull that money and buy a property. That could be the down payment, for your commercial nail shop. It could do so many things. And it's not that you have to have like an index universal life. You can get on a 2-year-old. Put it on a 2-year-old. They continue to get cash value. By the time, I've looked at some projections sometimes, where by the time the kid got 14, they had $100 and some thousand in their cash value that they could access. So think about in your mind what that would do for your kids if when they graduated from high school, they already had the confidence and posture to say, I'm okay. You know what I'm saying? If mom and dad's anything happened to them, I'm okay. So think about that. And then with the rising cost of living and economic uncertainty, it's kind of like what Nicole said. You have to have a side hustle. You have to have a business nowadays, And so financial security is the key. Financial security. And it doesn't take a lot. It just takes being consistent with it. this can protect your family from generations to come. You know, I don't want to get all into trust and things like that, but you could actually put the life insurance policy in the name of a trust to where it just carries on. And you could do an irrevocable or a revocable trust, depending on how you want it to go. You know, if you don't want any changes and you want from 150 years from now for everything that you set up to be the same, then set it up that way. And then make the trust the beneficiary. And that money just continues. And just do that with everybody. And it will change your family tree, you guys. And so the pros of IULs, lifetime coverage, because you're covered. Potential for higher returns compared to whole life policies. Flexibility in premiums and death benefits. Like I said, you can use it before you even die. That's why it is truly a life insurance policy. You don't have to wait till you die. You can use it. You can use it like me, I'm using mine now, but say if, God forbid, something happens and I get sick, I can use that money to take care of myself. Access to tax-free loans, and then the cons. Because I'm going to always tell y'all the good and the bad. There are higher premiums than term life, because you can get term life pretty cheap. But term life ain't going to give you, and this is the thing people don't understand about term life. And don't get me wrong, if that's all you can do something. Because I don't want to see you on a GoFundMe picture telling with some wings and all of that. No, time is out. I'm just saying, time is out for that. Time is out, y'all. The more you know, you need to do better. And so my thing is, with term, this is how they set us up. First of all, Dave Ramsey pushed it. And you know everybody, but like I said, have something. But what they do is, they'll give you a term life policy. You get it when you're 35. You're like, oh, let me get some insurance. You get a 40-year term life policy. By the time the term life ends, you still alive. Yeah. That policy is no longer valid. Yeah. And you done pay all this money into this policy. Then they say, well, just re-up and do another one. Well, now you ain't at the 35-year-old rate. You at the 75-year-old rate. And your rate is not even, it's like 100 times what it was back here. So that's what you got to think about. Yes, it may be a sacrifice, or it may be, and the thing is, you can get a smaller IUL policy. You can start with 100,000. I just feel like it's more beneficial, and then you can add on later. So that's the thing. And then that way you're covered for all of your life, instead of running, having term life, and then at some point it cuts off, and then you can't afford it, and then you don't have any insurance, so that's the thing. Complexity. So I would say stay connected with whoever your insurance company. I still call in to my insurance company and ask questions. One, because I have to answer other people's questions, and two, because I want to know, what's going on. And then the growth is tied to the market performance, but it does have caps and it has it has gains. So it gives you a floor to where you don't lose it all, Mm-hmm. And so I like that about it. So that's not really a con, kind of, it is a tool. It's not a one size fits all. That's why I encourage you to fill out and see if you have more yeses than nos, and just be honest with yourself. Nobody else has to see that. If you're interested in learning more, if you're interested in getting together and maybe me doing some projections for you or your kids or whoever, my number's at the bottom of that paper. You can text me your name and just put ready, and then I'll know you're texting me in regards to insurance. And so The truth is, life insurance isn't just about preparing for the end, it's about empowering the future. I'm empowering my family. You know? Imagine your children or grandchildren breaking free from the cycle of struggle because of the choices you make today. What you build now can create opportunities, dreams, and stability for generations to come. And don't just leave memories, leave a legacy that changes the narrative for your family forever. So let's leave legacies. Let's don't leave bills. Let's don't leave, invoices from the funeral home. Let's leave legacies. That's all I have.
Be a blessing to someone else.